Hey, everybody. Welcome to the show. Sorry for the extended music at the beginning, just trying to organize things. This is episode 4 of this wonderful show where we talk about stablecoins and their impact on humanity. And there's been a lot that's happened in that realm in the last week or so, and we'll talk about that. The stable account is manned by Jason. How you doing, Jason? He's scrambling in the back end to get everybody to come. We've got a few guests today. Seb is here. Thank you for joining. Trying to get a few more folks on stage, but
Apologies. I was busy trying to figure out my technology stack here. So
there we go.
it's great to be on the show at last, and I look forward to joining the next show as well as me. So
Absolutely, absolutely. A little background. I've been working with the Stable team for the last few months, advising, hosting shows like this, trying to educate myself, and in doing so, educate other people on the importance of stablecoins. Clearly, a lot of institutions believe there is a great deal of importance on them. And I think that amongst kind of the everyday user, including retail investors, participants around the globe, there's still a lot to learn. And I think that these conversations, whether people are listening to them live or in the future, are really helpful and are going to get bigger and bigger. So appreciate everybody for tuning in and everyone for being here. Um, Before we get started on some of the topics, would love to introduce Seb. If you want to do a bit of a background on yourself, and at the same time, also, I saw Ebuka. You're trying to join, and I might have accidentally removed you from the stage. So I'm inviting you to speak. If you want to come up on stage, go for it. But Seb, over to you.
Yeah, thank you, and happy to be here today. I'm Seb. I'm the head of product at Stable Finance, which we've already heard a lot about, but we are a DEX for local stablecoins and other RWAs. We're currently launched on Ethereum and Polygon, with an exciting launch on Base Chain coming in the next 2 weeks. And yeah, really happy to discuss stablecoins and payment networks in Africa today.
Yeah, amazing. I mean, we've touched on, I think, different regions over the last few weeks and having these conversations. Africa has not gotten enough attention and should, I think, because in many ways have advanced further when it comes to things like mobile payments and digital payments than Western nations. And I think a lot of people don't know that. So definitely would be good to understand, what is the impact of stablecoin technology for the African continent and where that can go. But maybe before we jump into that, I mean, just an insane amount of news in the stablecoin arena. So like just to name a few, and Seb, I'm going to ask you what you think is the biggest news. You've got you've got Circle IPO with extremely high demand. I didn't try to get in on that. You've got the Genius Act passing with the U.S. Senate. So kind of the large, I would say fair to say the largest crypto blockchain related bill in history. Still has to go through the House, but the Senate basically gave it the thumbs up. Stripe acquired a company called Privy, which is wallet infrastructure. And for anyone who doesn't know Stripe, I mean, it's basically one of the largest payment, infra companies on the internet. Scott Bessent, Treasury Secretary of the United States, tweeted saying that he believes in the next decade stablecoins are going to be a $3.7 trillion asset. Kind of insane to have someone of that level tweeting about this. Coinbase is going to do a proper credit card, so not a debit card, but a credit card, which actually lets you earn cash back in Bitcoin, and also it looks pretty cool. Um, South Korea has a new Democratic Party that has unveiled a stablecoin policy. And then, specific to Africa, the Director General of the Nigerian SEC announced plans to develop a framework for stablecoins. So, kind of an insane list of things happening all in the last week or so. So, Seb, I'm going to give you the hard decision of saying which one do you think has the most impact for you?
I mean, I was excited a few days ago to say it was going to be not just Stripe's recent acquisition, but just their continued like support and obviously like capital investment in the industry. I think that is far and away like one of the biggest kind of growth multipliers for the industry. From like a different perspective to all these announcements from American Express and Visa and MasterCard, that's kind of driving retail adoption, whereas Stripe is kind of not in everyone's mind as a consumer, but they're huge for merchants and businesses, in particular AI companies and like vertical SaaS companies. So if it wasn't for the Genius Act passing the Senate committee, then it would definitely be Stripe. But yeah, I think the Genius Act is definitely the biggest in the last year. It's just outside of what it's doing in the US, which we've seen. It's also kind of putting pressure and releasing the floodgates, if you will, for other country and other regulators around the world to kind of address this. And it's almost as if these other regulators almost don't have a choice anymore. Like if they want to resist the pressures of dollarization and the growth of USDT and USDC, then they're going to have to put some eyes on stablecoins.
Yeah, it does seem like a lot of the world was waiting for this to happen, for the U.S. basically to stamp approval. And I think you're right. Now it's a competition, right? Because many are saying that digital currencies like USDC or T are essentially going to further expand the dominance of certain currencies. So you have to basically, move quickly to compete. So I agree with you.
Yeah,
Yeah, and on the Stripe side, I mean, it's one of those companies that I would say the average person maybe has never even heard of, if I could be so bold to say that.
yeah.
Like they've used it, but they don't, like, if you say, "Oh, have you heard of Stripe?" Like, maybe I think I've paid for stuff maybe with that. Is it like PayPal or like, I
Yeah,
don't
there's
think.
there's there's very little like retail touch points, and I think that's kind of policy of theirs. They're almost like Shopify in that respect. They're happy to like support their customers, but they don't need to be in the forefront of everyone's mind.
Yeah, it's just this, and I don't use this in a bad way, but just like this insidious, company like that has embedded itself in the internet, and it's extremely powerful and useful, and has made commerce so easy. And so it is definitely very exciting to see them. I would say relatively quietly, growing in the crypto sector, quietly from like a marketing and branding perspective, not from a monetary and decision making perspective. Like that's a pretty
Yeah,
gigantic decision.
and that's why I mentioned them as like the biggest outside of the Genius Act is, as many of you will know, they also acquired for close to $1 billion a company called Bridge late last year, which is to do with like issuance of stable coins and also like uh, API swapping, and that's kind of serving one side of Stripe's business, and then this acquisition is just kind of another modular input to other parts of their business. It obviously brings up interesting questions about whether you build your stablecoin infrastructure yourself as a big tech company or if you buy it in their case. Obviously, they decided that with the, like, I guess, smaller skill base or personnel base in stablecoins and blockchain, as well as just the speed needed to like suck up the space, that buying it was a lot better option.
Yeah, no, totally makes sense. And congrats to that team. Wish I was an investor. Sadly, I am not, but I am a user. That's for sure.
Yes, they're very similar to Stripe. Like you almost don't notice they're there until you're really using them. And for everyone's understanding, like kind of my use of them has been like when you're from a DeFi side, when you're connecting to a DApp, oftentimes you'll be using like a Privy SDK to connect your wallet to the DApp. I think their primary product is about like uh, almost wallet issuance or setting up wallets, primarily for people that don't want to worry about private keys, so they can use email sign up or social sign up or pass keys, which is obviously, if Stripe's going to be offering like stablecoin payments, they need to give their merchants and their merchants' customers options to set up a wallet.
Yep. And admittedly, I use both. I mean, I've got my hardcore wallets and I've got a few privy, ones that are linked to my Twitter account. So hopefully I don't get thrown off of Twitter and lose my account access someday, because that'll be not great. Which is why it's good to have your own keys, of course. um,
Exactly.
um, I did say we got Ebika up on stage, so would love to hear from you a little bit about your background. How you got into stable coins and what you're working on now.
Yeah, most definitely. Thank you so much, guys, for having me. But we can hear me clearly.
Yeah, you sound okay.
Awesome. I'm Emmanuel. Ebuka is my name here on Twitter. That's my middle name. But I'm Emmanuel, one of the three co-founders of Link, and I'm CEO as well. My background, I had a background in computer science and engineering. Before I got into when building a startup in the first place, I was building algo FX tools, on platforms like TradingView and the rest of them. And my story, I like saying it this way. About a couple years back, before stablecoins became really cool, a cool instrument for moving money around. Because first, by the way, I'm based out of like Cyprus, right? So international student here. So my mom would have to like book FX offers a month before I could get cash, right? It was really insane. And the pandemic started. We're locked at home. Myself and one of my other co-founders, and then we just wanted to like do something, build stuff. As I got into the foreign exchange market in the first place, and then that phased out, and then we're still faced with the same problem in getting money, right? So at the time, we're just like, okay, you know what? Let's just build this transfer rights from Africa for Africa, right? Because I'm originally from Nigeria, right? So it's difficult. It used to be very difficult to send money from like developed markets to like emerging markets, and you could think about how difficult it is to do it in the reverse, right? It was crazy because to source dollars was just real burden that no one could really solve at the time. So we ventured into building out this platform with TradFi Rails. Had a couple of successes, but it was really hard. Infrastructure providers weren't just there to really help us. And then, I stumbled just researching, right? Got into this rabbit hole, or I discovered this network called Stellar, the Stellar network, right? One of the probably one of the most underrated networks, in the crypto space. And then, before stablecoins became cool, they had built out this framework with stablecoins being issued by regulated entities in each market, both local and USD ones. And then it looked really cool. I liked the concept, right? Because it showed that money could be interoperable, it could be fast, could settle real time. And then that is really what got us into building Link. So today, what Link is building programmable FX infrastructure for global businesses powered by local and USD stable coins. So today, we're talking about the what we're most excited about, right? From all the stablecoin news this week. And I think for me, what I'm most excited about is the news out of Korea, right? The reason why is because for the longest of time, we had this thesis that like non-USD stable coins, right, would come into the scene to help complete the stack with what stable coins are essentially doing today. So big ups to Stabull, for example, that are building like core FX infrastructure. So today what we basically do is work with businesses on one side on TradFi to ensure that they can plug in monetizable FX flows, because even though USDC, USDT are populating in like emerging markets, right? The The FX margins on those stable coins, especially in finality, are really, really low, right? So we feel like with FX on chain, it's a far better advantage for businesses. So that's what we're building today, building that stack that would take stablecoin adoption to the roof. Yeah, so super excited to be here and to chat more and share thoughts as well.
Yeah, makes sense. And I think agreed. Competition is good for kind of retail, but then also for obviously investors and businesses. They can make strategic decisions if different currencies are in the picture. Um, Maybe you can also just help kind of set the scene for like payments in Africa. What's kind of the big picture view of the landscape? Maybe for
Yeah.
people outside the continent, what is the last maybe 5 years look like, and how do you think stable coins are going to change the way people are paying each other now?
Well, I think for the longest, right, I like telling folks when we talk about like stable coins, particularly to when the USD backed ones like USDT, USDC, I think it was specially built for markets like Africa, right? Because there is a lot of imports going in, there's a lot of exports, there's a lot of B2B transactions, and a ton of folks making things that would want to get paid on time without losing value, and a ton of folks that want to save their earnings from the high inflation that some of these currencies might supposedly have. So in Africa, what do payment landscape look like? We have over 54 countries, right? So in West Africa, we have dominance with bank transfers and mobile money. So in Nigeria, for example, bank transfers are like the most used domestic form of payments. In Eastern Africa, we have mobile money, Momo, the rest of them doing some really cool work there. And then in other parts of Africa, like Southern Africa, bank transfers, EFTs. But where stablecoin plays a major game is that it really connects the continent to the rest of the world, right? And I think for the past 5 years, what has happened, what we've seen increasingly is that there is this democratization to FX liquidity like we've never seen before, right? So we've seen businesses being able to scale without having to, think about how they would go to their bank, like I previously mentioned, right, where you would have to go and make FX offers for up to a month, right? But now it can be instant. So, in terms of payment landscape for stablecoins will continue to grow. Where we see it going now, the next stage is that because there's adoption for it, we've seen that even the governments, for example, in Nigeria, where they've passed regulations around it, right? It's initial cohorts already announced, companies announced that can issue stable coins out of there, right? It just feels that like that would be the next form of payment. So I think the way we've thought about it, at least at Link, on the continent generally, is that a ton of countries, just the same way we're seeing in other parts of the world, will want to protect their sovereignty in terms of against dollarization, right? So I think there'll be a controlled and this is just our thesis, right? There'll be a controlled approach around how payments are being made, especially with stable coins, where USDC is accepted, but like we can have our own local currency stable coin that can basically aid remittance, bring in more remittance flows into the countries, allow trade to be faster and cheaper. So yeah, we'll probably see we're definitely going to see an upward trajectory in terms of stable coins in the continent. So it's a no-brainer there.
And quick follow up, do you think in terms of, just let's call them, consumers, everyday people, do you
Yeah.
think that the stablecoin technology is really well known, or do you feel like, much like probably in the US, that it's just going to be kind of like the hidden infrastructure and it doesn't really matter? People will just keep using apps, but the apps will
Yeah.
be powered differently.
Yeah, so I think at the end of it, it's be the latter, right? Where a ton of folks will have it underneath. Even though, like I like saying a lot, in Africa we have huge crypto adoption, but the nuance there I like saying is check the reason why we have that adoption, right? In other markets, it can be just okay, the crypto adoption of speculation, folks are trying to get access, which we do have to as well. But the biggest use case for us is payments, right? Now, a ton of people, I can paint a picture for you. For example, let's say there's a merchant based off a market in Onitsha. Onitsha is like one of the buzzing business hubs in Nigeria, right? The merchant wants to pay their supplier in China, right? They might have zero knowledge about crypto, but they have one dude that probably has access to, that knows USDT or has access to USDT, right? Essentially, they get the local currency via what we call like stablecoin sandwich, like we all know about, convert that to USDT from maybe local Nigerian naira, and then off ramp that to their supplier in China, right? China, the Chinese merchant receives it, and they are good to go. So I think eventually where we would still see more most adoption at the end of the day, because Africa is a bit different from like Latam. In Latam, where in Turkey, in Latam, you can literally go to stores and pay with USDT, right? Literally, you can accept it. But I think we might get to the stage where folks accept it. But honestly, in view, I think it would be where simple apps are built. In fact, some of the banks in at least Nigeria use stablecoins today, right? They've not come out. A ton of big payment providers are using them already to facilitate payment. So I think the innovation will continue with what folks are used to, but that are updated by the stablecoin stack at the back end. Yeah.
Everyone has to have the one dude, as you say, to help them out. Very good, very good.
I think the remittance point is a very good case to talk about. I think a lot of like stablecoin companies, when they say what the benefits of like cross-border stablecoin payments are, they're often comparing to Swift. But I think it's
Yeah.
important to realize that that's like the comparison there, or the cost and time advantages aren't for like the major corridors like US to Euro. That's not what like stablecoins are really solving, because those corridors are relatively cheap and somewhat fast anyway. It's the like smaller or less developed corridors, like from Africa to US, or the reverse, as you said, or to Latam, where stablecoins can really have a huge improvement on cost and, more importantly, time. So you're not waiting like T+2 days for a remittance payment.
Yeah, 100%. I mean, I will say, just like personal anecdote, related. I live in the U.S. I've been trying to get a payment from one of my contractors through a bank wire for the last week. He uses Chase, and I have a reputable bank, and the wire won't go through. Like,
That's
this is
crazy. In the
it's
same country.
ridiculous. Like, it's been 5 days, and we're both calling our banks and yelling at them. And it's not like, it's like $5,000. I mean, it's a lot of money, but it's not like we're trying to send $500,000 or something like that. So yeah, stable coins, they're
Yeah.
going to kill banks, and I'm happy about it.
Well, I mean, the
Yeah. So
important part of that is
interesting.
that like
Yeah.
there's
Yeah. So go for it.
usually like 5 or 6 other banks involved in that transaction. Maybe not in the two countries that you're trying to transact between. I mean, that's kind of the traditional Swift model, is like there's all these bank relationships behind the scenes, and they're kind of not necessarily passing your money, but passing information around. And that's what causes the like long time periods,
Yeah.
is every bank in between has to like verify the payment.
Yeah, so I guess to his point, right? I think he was even talking about like in the same country, because trying to send money a wire, right, from himself to his contractor. So it's America, same country, right? Domestic payments, right?
Right.
And like just to piggyback a bit to the an initial question you asked me about like the landscape. So in like Nigeria, right? If I need to send money domestically from myself to you, you get it in less than a second in some cases, sometimes maybe 2 minutes, 3 minutes at most, right? So the banking system works, right? It's connected. So in that kind of case, if you tell folks about stable coins, I guess maybe blockchain finality for a local stablecoin can work in that kind of case, right? A ledger system. But when you talk about USDC in a domestic case, you're just like, yo, my bank transfer works, right? So just to sort of give a view of how like stable coins can be is not a size fit all. It sort of would interface differently in different markets, just like Seb said as well, in terms when you're comparing like the Euro USD corridor in different markets. So in market like the US, right? I think it would have been a far better case that your contractor received USDC rather than doing like a
Yes.
bank transfer.
Is that because Nigeria has like a real-time payment network, like the NIP or something? NIP?
Yes, NIBS, yeah,
Gotcha.
NIP NIBS, yeah. So all banks are
Gotcha. Yeah. So yeah,
interconnected.
definitely agree that the kind of real-time payment use case is probably more appropriate to the US, where they're almost behind other countries that, like Brazil, that has PIX, and Nigeria.
Exactly.
All right, everyone. I think I'm back. Can you guys hear me okay?
Yeah, we
Yeah.
got you back.
All right.
You
My
missed
internet
some good
connection is
stuff
just as
though.
bad as my
You'll have to go back and listen to the recording
to get the proper answer. Yes. Yeah, very good. So, I mean, and sorry guys for missing just like the last 5 minutes or so, but Emmanuel, on your end, where are you trying to take, like, if we look at sort of where the stablecoin market is in Africa today, where are you personally looking to expand and grow, and like where would you like things to be in the next, say, year, and how specifically are you guys at Link trying to push things forward?
Yeah. So I think for us, right, because we've been in this for a couple of years, right? I'm really trying to understand like trades, just like I said at the beginning, like you guys at Stabull are doing a great job, because I know when the deck started, we're really trying to solve the same kind of problem in terms of FX. I think for us right now, we called it like a year ago, that by this time, right, we'll see more regulatory. Talk to investors. I'm like, how sure are you about this? I'm like, you see it. So I was like, next year you would see like regulatory push for not just stable coins, but stable coins in distinct countries. So for us, how we're looking at it is focus on Nigeria, of course, South Africa, some other Eastern African countries, but focus is really on businesses, fintechs that are trying to scale into emerging and frontier corridors, right? Providing the best FX experience there. So today, if I talk to a regular business about, Stables has a pool with, let's say, South African rands and US dollars. So that business, it just take them back to what USDC or USDT looked like maybe 4 years ago, where you would tell someone like, "What's that?" They didn't care, right? So what we want to do is all these local stable coins are in silos, right? Banking rails are messed up. Liquidity is fragmented. There's Stables, there's the FX, there's Inch. There are different chains. So what we're essentially building is an FX stack that would work, that businesses can just plug in via APIs, right? That would drive, so on one hand, drive liquidity on chain, right? To drive the adoption for these stable coins. And then on the other hand, make stablecoin based payments for foreign exchange through foreign exchange cheaper, fast, and monetizable, right? So that's where we're at. So we now stablecoins have gotten mature where it's accepted, right? So we're at that stage where we want to plug into the stack, be the FX stack for the market, for emerging and frontier market, that basically brings everything together and grows adoption. So that's how we're thinking about it. So over the next 5 years, we want to see more stable coins being issued in this market. We want to see more of liquidity flowing through there, both on an institutional and retail level, right? More acceptance into card networks, where we could plug in one API into a card network, and then it's swapping on chain between all these regulated stable coins real time. So I guess that's the world we want to get to. I don't know if it's doable in 5 years, but yeah.
And for the like local stable coins in particular, like NGNC. So what you're saying is,
Yeah.
the main use case for you guys, you see, is kind of in that flow of like B2B, or even like retail remittance between different countries. Like people have their NGNC, or a business has their NGNC and they want to pay a merchant in China in USDT. That's the kind of use case you see is most important for local stablecoin adoption.
So that's one that those are the entry use cases, right? I can see like folks already. We have folks I'm talking to today that are trying to build credit platforms with it, right? There are folks trying to build lending protocols with it, so right. So there are several use cases around it. I guess at the end of the markets in each of these key regions would be the ones to sort of react to what is being built. In some cases, we might need to build that market. But for us personally, it is top of mind is how we get it first into the hands of fintechs that are trying to compete in key markets, and especially in terms of margins. And then be it B2B payments, be it remittances, be it vendor-based or merchant-based kind of payments, and then scale that gradually into institutional level with banks, right? Where banking OTC structures, like with Swift, for example, instead of using the normal banking rails with different banking approvals, it can be real time with all these stable coins moving. So yeah, so of course B2B payments, remittances, big use cases that will drive the adoption for us in what we're looking for.
Back to something you said about liquidity, more established stable coins, certainly have deep liquidity. Local stable coins are looking to expand it. Realistically, that's probably going to come from institutional entities. But do you guys foresee there could be an increase in liquidity of local stable coins that is significant? In the same way, like, right now, a retail, investor trader is like, oh, I just want to get yield. And yield means I'm earning interest on putting money into this, whatever, stock token, savings account. Like, do you think that it's realistic to envision a world where people see liquidity providing as a way to earn yield, just like they would in a savings account, 5 years ago?
Exactly. So at the end of the day, it's going to be I'm trying to remember the word. They call it I remember the word, but it's more like it is dependent on how these solutions are presented to these end consumers, right? The DeFi in front, DeFi at the back, fintech in front kind of model. So if we have cases where we're like, oh, if you're saving into this euro account, right? Let's say you make a euro deposit with your traditional payment method, right? And on this wallet, you're actually holding euros to the user. You're getting probably XYZ APY, which is far better than your bank. But at the back end, you're literally depositing euro C into a Stabull pool, for example, right? So I guess this will be one of the ways that could drive adoption, of course, where the presentation is less DeFi, right? Let the DeFi work be all the complex stuff happening at the back. But if users could, get into these pools without necessarily having to get into them by connecting their wallet, right? Let them come into, just like what I said at the beginning, early into applications that are accustomed to. I think this will be one of the ways that would, of course, driving liquidity. So I guess what we've had thus far, great stuff with Stabulls, great stuff with.
Yeah, I mean, I can echo that it is very clear in kind of the trend that there are a lot of like retail facing apps, whether they're from neobanks or fintechs or new Web3 apps that are offering these kind of services like cross-border payments and yield opportunities and US digital accounts. So for us, it's almost like we should be concentrating on our kind of infrastructure offering, like best swap rates with low slippage and highest yield in our stable pools.
But I guess what I'm hearing is that an outcome in terms of getting lots of retail on board, it is that it is sort of hidden in the background. A person is presented with, hey, you can earn 7% on your money. Just put it into this folder, and then basically on the back end, the apps are doing the LP work and optimization.
Yeah, exactly. And we saw a lot of that, maybe to lesser extent in the last kind of DeFi bull market, where people were packaging up DeFi yields into kind of more TradFi products. And I guess personally, my hope would be that there was a bit more transparency on like what was being packaged up. We kind of pride ourselves on having like DEX yields are reasonably transparent, and you could even say sustainable. It's easy to understand. You're providing liquidity to facilitate swaps, and you're earning a yield from the spread or swap fee on those pulls. But yeah, definitely agree with like the retail facing apps that are very common, or a lot more coming out, is kind of the distribution network for DeFi and bringing that to a larger audience.
Yeah, which I mean, honestly, is a business opportunity, right? The teams that can most effectively obscure the complexity and take a small cut for the convenience they provide are going to do very well, because the majority of people don't want to think about, you know, the intricacies of complex you know, LPs and things like that. So, and I'm one of them, right? I'm lazy and I'll pay to be lazy. I don't want to do any work when it comes to investing. I want my money to just sit there and I can just check a dashboard and say, hey, it went up or it went down. Hopefully more up. Maybe, Emmanuel, we can talk a little bit also about you know, market opportunity with Africa in particular. I mean, earlier I talked about the U.S. Treasury Secretary saying something like, you know, he predicts stablecoins are going to be, you know, about 10% of the overall sort of number of transactions. But in Africa, you know, it's realistically like 30 to 40% of transactions are now basically stable coins. So, you know, what are you thinking about in terms of market opportunity and where things can go, whether it's, you know, maybe for you as, you know, a business leader, or I guess even for investors?
You're on mute, Emmanuel.
Yo,
welcome back.
Can you guys hear me now? It keeps crashing on my end, man.
Man, yeah, but you're good now.
Yeah, sorry, if you don't mind, do you mind going over the question again, because just before you finished up, it crashed.
Yeah. So just I'll kind of do the shorter version. Basically, you know, unlike, you know, other large markets, the percentage of overall transactions in Africa using stablecoins is quite high. Recent reports are showing 30-40%. So, I mean, what are you seeing in terms of just the market opportunity, both, you know, from your perspective as somebody who's building a business, and then maybe for investors as well? Like, why are people sleeping on Africa, or I mean, maybe not understanding just the scale of potential growth?
This is a multifaceted question. Well, I guess so first and foremost, stablecoins will continue to grow in the market. In terms of investors, I guess investors will still come around at some point, because there's a ton of stablecoin innovation happening right now. There are a ton of folks like building really cool solutions around stablecoins in a hybrid way, building dexes now, building DeFi protocols. So I think trade back some years back, I think as of 2022, when I would talk with investors, and you know, one of the biggest things they said about at the time when stable coins like USDC and USDT started growing in demand in our market, they were like, okay, yeah, you guys are doing all this cool stuff, but we're not really seeing a lot of builders bringing things on chain. And I guess that is realistically changing, right? So even closely, you see some of the biggest blockchain networks coming to set up in Africa, from Base that just announced a ton of new leads in Africa, to Solana doing some really deep work, to Stellar that just concluded a regional conference in the market. So I guess what we've lacked for the longest is the infrastructure, right, in terms of building, or market attention that you already traditionally have in the West, especially with these blockchain networks. And we've already started seeing that in the market. It's a market that cannot be ignored, really, because I think if everything is played well, it's going to be one of the markets that will really lead in terms of native adoption. Not just native adoption, but adoption that can be shown on chain, right? Where we're going to be like, oh, $1 billion is being moved daily between let's say US and SA or US and Nigeria, and we can visibly see that transaction on chain, right? So I guess the market is getting mature. We're seeing more innovation, and I guess, like I said, investors come around. They've already started already, looking very closely, working with builders to just take it to that next stage. So yeah, those are my like few cents in terms of like where the market is headed, at least with stablecoin adoption to continue growing. It's here to stay.
Yeah, I just wanted to jump in here from some research that we did just for the show, and there's just so many announcements that is just flooding the internet right now. Yellow Card, Visa is agreeing to hasten up stablecoin adoption in Africa, and there's many others. One of them was an interesting one is like Opera, like just the web browser is trying to create
Reseller
there and
MiniPay.
yeah, MiniPay with just like in the remittance volumes are in the billions of dollars now. So I think it's really a race, and I think everybody kind of forgot one interesting narrative about how receptive and how big the opportunity for Africa was as it relates to general crypto. Is the very platform that we're having this conversation on used to belong to Jack Dorsey. And everybody's like, well, what happened to Jack? Well, he actually went to Africa to promote Bitcoin infrastructure, Bitcoin rails. Like he gave up like X in order to just create the type of environment that we're now starting to see is emerging in Africa with crypto adoption. So I think that the early days are still here. Like we're still in the very beginning. We're in the genesis of this sort of like cryptocurrency wave of infrastructure, and part of that, of course, is going to be stable coins, and the opportunity now to get involved with stable coins, whether that is create a wallet or create like a neobank, or to even become an issuer of stable coins through technology. Rails that are now available, like we're seeing with companies like Braille.xyz, it's now. So this is really interesting, and we don't have on Chuck, who recently created the stablecoin report from Paxos, but I think that that's worth reading as well, and we hope to have a lot more content as more African stablecoin issuers join our own stable platform. So if you're building a coin, we would love to talk to you.
Cool. I think that's a good place to wrap up. We may have lost Bored momentarily.
Oh, sorry about that. I was talking into the ether. My bad. But yes, I think we are towards the end here, and I was just thinking that I would love to see from the Stable team, and I know I've shared this with you guys too, is seeing it as like a central place where people can come and learn about stable coins, local stable coins, what is happening in in markets that maybe they don't live in. So certainly would love over time. To see an expansion there, just because there's a lot to absorb, there's a lot for people to learn, and part of the reason I like working with you guys is like you educate me so much on where things are going with stable coins, and would love to see that knowledge spill over into the public as well. So yeah, maybe this is a good opportunity just to kind of close things out. If you guys on the stable side want to talk a little bit again about what's coming in the next few weeks, and then Emmanuel, for you to close out after that, and maybe share where people can follow along what you're working on. So yeah, over to the Stable team.
Yeah, thanks. I mean, we're most excited about our launch on Base in the next couple of weeks, and that was partly due to we haven't really got any Africa currency pegged stablecoins listed on our platform yet, and there's already a couple of them on Base, along with a range of other local stablecoins. So yeah, big ups to Base for their kind of support of the local stablecoin movement. And we're really excited about that. We've also just launched our liquidity mining program. So for anyone that's interested in local stablecoins and wants to provide liquidity to those pools, there's very attractive yields on them right now. You can, for example, deposit your Brazilian real stablecoin and USDC into the pool. You earn a share of the swap fees, and then you also can stake those LP tokens to get stable rewards and incentives as well. So thanks very much for having us again, Board, and this was a good discussion.
Yeah, absolutely. Thank you, guys. And Emmanuel, would love to hear last from you. Maybe anything else you didn't share about what you're working on that you'd like to, and then just besides, I guess your Twitter, where else can people learn more?
Most definitely. Thank you so much for having me here for this insightful discourse. So definitely, Seb, we should bring in NGNC into Stabull's very shortly. I know we've been talking about it for a while. And aside that, we're really just focused on building all the core payment experiences that will make it very easy to get into these local stable coins, building out the FX stack for them, building out the liquidity routing stack for them. So if you're a business trying to expand into like Brazil, the Philippines, Nigeria, South Africa, some core markets, and you want to probably monetize your FX rails, even though you're using stablecoins today, we could hit us up. Our ID on X is link_IO, or you could send me direct DM. So as well, our website is linkio.world. Looking forward to supporting more builders. What we're focused on right now, like I said, is all the product builds, talking to more community leaders, in this time period. We just got supported by Circle in their grant program in Africa, about 5 startups who were part of that. And then we're talking to, if you're in Singapore, by the way, for Solana Ignition, pass by. Would love to have a chat with you about like local stable coins and what we're building with them and how we could support each other. Besides that, I'm super excited that we could have this discuss. I'll wrap things up from here.
Amazing. Well, thank you for joining us today. Really appreciate that. And yeah, for everyone listening live, thank you so much. For everyone who listens to the recorded spaces later, thank you from the past. If you have any topics, questions, things that you would love for us to discuss on these recurring, spaces, please let the Stabull team know. Let me know. We always cover a lot, but would love for people to help drive the content as well. So yeah, with that, thanks everybody again for joining us today. We'll be back in a few weeks, and we'll talk soon.